Good morning, Bookmap. Happy Monday, October 2nd. My name is Charles. Oh boy.
Morning, Bookmap. Happy.
Welcome to the stream. My name is Charles. I talk about the ES, the NQ, and the two-way auction process. I run a community called Piratetraders. So the way I look at the market is as an auction process. And essentially what that means is I look at the competition between the buyers and the sellers, and then I make assumptions about what comes next as a result, and that's how I enter my trades. So last week on Thursday, the market pushed lower, and it came back up, and it got what we call cessation of the downtrend on the daily. So while the market is continuing to make lower highs and lower lows again and again, it is in a trend on the day time frame. And so when we were finally able to poke up above, that was the end of the trend. That was the end of the momentum to the downside, and that was the end of the excess. So what does excess lead to? It leads to balance. There are two ways a market can balance off when it creates this kind of excess to the downside. One way is that it can pull back up with price, okay, heading back up to test the areas where it broke out to the downside. The other way it can balance off that excess is using time, going sideways at a lower price. Okay, so it comes down and then it just goes sideways at a lower price. To me right now, because of Friday's trade and because of the overnight trade, I believe that this second scenario is playing out, that we are balancing using time, which just basically means we are likely to continue to go sideways inside of a range here. So what do we do with that information? Well, first and foremost, we don't get quite as bearish. It looks like we may even have a gap down this morning, but we're not going to get quite as bearish at the lows from Friday. Why? Well, because we may just be heading down to test what is going to become a balance area low. We may just be poking down to turn around and come right back up. So the fact that the market might be in balance using time is giving us a signal not to get too bearish at the lows. Okay? It is also giving us a signal if the market comes back up and gets near Friday's highs, that it might run out of momentum up there and come back down. Both scenarios could play out in balance. Sorry about that. Good morning, Ebb and Flow, Rui, David G, and Jay. Welcome. For those of you that are hanging out, there's 38 people hanging out. Please smash that thumbs up button, smash that like, and say hello in the chat. Good morning, Ken. Good morning, Nap. If you guys have any questions for me, hit me with them. We got a half an hour till the market opens. All right, let's start by zooming out here this morning, and we'll do Jim Dalton's top-down approach. We're basically going to look at the market from the monthly, the weekly, and then the daily to try to give us some other perspective, to give us a different look at things. So right away, zooming out and looking at the market on a monthly, I could see this as being an excellent place here in October for the market to turn around and head right back up. Why do I say that? Two things. One, we are retesting previous resistance from the month time frame. Resistance here, resistance here, resistance here, resistance here. Okay? We came back down. We tested that as support last week. So if that can hold, if that support can hold, it should allow the market to turn around and head higher. The other thing is the momentum from the lows that created this move to the upside, right? The trend line created by those lows could also act as support. If that is going to act as support, it should turn around this month on the month time frame. And then lastly, a larger potential balance area being the fact that the market moved on the month time frame for 2 months straight up, and then it came back down for 2 months straight down, means that actually, this is getting a little more complicated, but on the monthly time frame, we've been rebalancing. We've been balancing off that excess using price. So either scenario, in that case, whether we were balancing it off using price or time, we've spent enough and it's ready to turn around and head higher. So on the month time frame, the market is dancing right on a level where it could find support and reverse and go higher. But at the same time, if it breaks lower, if the market starts to push below 4,200, well, now all of a sudden we've lost previous support, we've lost the trend line, and we're one time framing down on a month time frame, which is very bearish to see. So they're at a great level to find support, turn around, and take the market higher. But if they don't, things get bearish quick. All right, let's zoom in a little bit and take a look at the weekly time frame. So, okay, we're seeing a lot of the same things we just saw on the month time frame. We're just seeing them with a little bit more detail, a little bit more perspective here on the weekly. So first things first, we got that trend line. We can see we did respect that perfectly last week. So the question will become, do we respect it again this week? Right? And then what happens as a result? Yeah, nothing else jumping out at me about the weekly. So let's zoom into the daily and take a look at the market on the day time frame. So again, we're right back to looking at this same trend line coming up from the lows of October. The market dipped below it on Thursday, but recovered. It closed back above it. It tested it. It held as support on Friday. So that is bullish to see. As I just mentioned, we have somewhat of a smaller balance area forming on the day time frame in here. The market made a big move. It created a lot of excess to the downside. Now we're beginning to balance off that excess. I would also look for momentum down at resistance near Friday's high. Okay. So that's the perspective that the monthly, weekly, and daily gives me. So now I zoom in to the market profile chart and I look for a more detailed understanding of that. What we talked about, the last thing we just mentioned on the daily, was the excess being balanced off with time in here. So let's start with that. What are the levels that could be a balance area high and a balance area low for the market? Well, if we're looking for balance area lows, what's the first thing that jumps out at us? We have 3 lows in the same place, right? So the balance area low, if there is one, is somewhere in here. Now, this first low, we don't need to put too much weight on because that was while the market was pushing lower. But this one held as good, strong support. So if I had to pick a level right here that I would say is the balance area low, I would call it this node right here. 4303. Well, we'll make it easy. We'll just call it 4300. Okay? So the new balance area low is 4300. All right. If that's the balance area low, where would the balance area high be? Well, we dipped below that low. We came back up. We turned it into support. And then we went up here. And this is where we turned around and came back down. So where is previous resistance? That is probably the balance area high. So I would say if the market is going to go sideways for a few days using time to balance off the excess, it will bounce somewhere between 4,300 and 4,370. Okay, that's going to be the balance area. So if we opened with a gap down this morning, I'd be assuming we're heading to 4,300. If we open inside yesterday's range, it is anyone's guess. We're in the middle of balance. We could go anywhere. But the higher probability would still be lower because the last thing we did was a look above and fail of the balance area high. So that would increase the odds we're going to test 4,300. So all these things are basically telling me just to act with caution this morning. No reason to rush into trades. There will be a lot of opportunities. If the market pushes lower without me, figuring out whether it finds support here to reverse and come back up will present opportunities for trades. I could go long to head back up to the balance area high, or I could go short for continuation of the weekly momentum lower. Or if the market just goes sideways all day inside today's range, there might be nothing for me to do. So let's wait and see. Last thing I'll point out about the market profile structure here. At the highs of the day, this is pretty close to, it's not quite a textbook, but it's pretty close to a textbook 45-degree angle. And it's right on top of a base of single prints down from last week. So that is likely to act as very, very strong resistance. So to me, this morning, it's basically a chop zone between the overnight low and the overnight high. And whichever direction it breaks, if it breaks the low, turns that into resistance, I'll be bearish for continuation lower, vice versa with the high. The one caveat, though, with the low is, again, if I think this is a balance area, we may just need to test 4,300. And as soon as we look below, boop, that might trigger us to turn around and get back up. So I will get bearish at the overnight low, but only to test the balance area low, only to get to 4,300. Good morning, Cloud. Jackal. Is this a continuous contract? Yes, it is. So if you're talking about the market profile chart on the left, it is a continuous contract. So the levels are as they were on that day, depending on which contract it was. Kaval says, which broker do I use for trading? I don't do broker recommendations. I just don't think it's a good thing. You know, your broker is a personal decision. You got to figure out where you live, how much money you have to trade with, what, types of strategies you're trading. So like to give you an example, I use TD Ameritrade, but I don't use TD Ameritrade if I'm trading micros because their fees are too high. So for that, I use AMP futures, but that's not a recommendation. It's just telling you what I use. Fighter Pilot, good morning to you. Sahil says, when you say the overnight low, you mean 4309? Correct, yeah. So the way I characterize the market is I separate it between two different time frames. There is what I call the regular trading hours. That's 9:30 in the morning to 4 p.m. New York time. That's the regular trading hours. And then everything else I just call the overnight. So basically everything that traded from Friday, 4 p.m. till now, I call that all the overnight. Crocody, good morning to you. Welcome. Bust a move in the house. Frito says, what time frame are you working? Well, I'm an intraday trader, so I take my trades, between 9:30 a.m. and 4 p.m. I don't have any exact time frame that I trade on. Sometimes I take scalps. Sometimes I'm like, look, I can grab a quick point or two here, and I take those type of trades. Sometimes I sit in trades all day long. There are times where I'll get in a gap and go trade in the first 2 minutes of the day and stay in it until almost market close. So it all just depends. It depends what the market's doing, how it's behaving, so on and so forth. I will tell you right now, because I believe the market is in balance, okay? That means today is going to be a very choppy day. Even if we get resistance and we start to push lower, we're probably not going to go very far. You know what I mean? So today would be a day not to fall in love with trades. Take profits very quickly. Look to re-enter. Now, let's say, just as a hypothetical, we weren't opening down here near Friday's low, but instead we were opening up here near Friday's high, right? Let's say we were doing that instead. Well, then, if the market got above Friday's high and found support, that would be a trade I would just get in and stay in all day long, right? Because that would be momentum. If we got above Friday's high and we found support up there, that would be a sign that we're repairing the excess down with a move up. We're repairing with price. So now all this weakness needs to be repaired above. That would be very bullish to see. That would also be a continuation of the momentum on the daily. That would be the fourth day in a row. The third day in a row where the market would be making higher highs and higher lows. Okay, so that would be very bullish, and I'd want to get in a long trade, and I'd want to push it as far as I can push it. But this is a totally different scenario. Pushing below yesterday's low is a sign of balance, not a sign of excess. So I don't want to fall in love with that trade. I want to get in and take profits very quickly. So I didn't know, when I woke up this morning, when I opened my eyes, I didn't know if the overnight market would have taken us up here or taken us down here. But now that I see what's happening, great. I know what I got to do today. I know the posture that I have to take. Damon says, can we see the chart in 30 milliseconds? Like line chart or candlesticks? I'm a newbie, by the way. Yeah, I don't do milliseconds. Not at all. You can zoom in with Bookmap. You can zoom into like a crazy fraction of a second. Tiny, tiny increments of time. But I don't trade like that. So basically the way you want to think about it is throughout the day as the market moves, it moves up, it moves down, it moves up, it moves down. What it's doing is it's creating information, right? By where it goes, by how much time it spends there, and by how much volume it brings in at that particular level, that is information. So every trader on every time frame is using the same information, right? Everyone's seeing the same things. Market goes to this level. It spends this much time. It brings in this much volume. Everyone. So when you're choosing what time frame you want to participate in, what kind of trader you want to be, how you want to read charts, the way you choose the time frame that's right for you is the one that is the easiest for you to understand. For me, zooming into like 1 minute candles or 5 minute candles, it's even 15-minute candles really is just too fast. So I got to zoom out. I got to slow things down. That's when the information makes sense to me. So who cares about having 1,000 signals in an hour, right? If none of them really help you know how to take a trade. Whereas if you're looking at an hourly candle and you're waiting and you print the new candle and then you've got a piece of information you can use to trade, that's the way to do it. So you will see as I continue on throughout the day, I just need to kind of see where the market goes and how much time it spends there. The time frame of the candles doesn't have that big of an effect. But for what it's worth, the market profile chart, it's not up yet because the market hasn't opened. But in 8 minutes here, you're going to see another profile like this one. It's going to pop up over here on the right. There'll be two sets of columns right next to each other. And I'll point this out when it happens. There'll be two next to each other. The one on the right will be 30-minute TPOs. So there'll be letters instead of candles, but they'll be in 30-minute increments. Good morning, Laura. Shawshank says, just joined in. What are the plans for today? Yeah, so essentially I see the ES as being in balance. What that basically means is this range here is just a big balance area where the market is going to trade for the next few days. So if the market gets below Friday's low and it's getting resistance there, I will assume we're heading lower. I will become bearish, but I'm not obsessed that it has to make a big move. It may just make one small move to the downside and then turn around and come right back up. Okay? I'm also expecting very strong resistance in this node right here around 43.50 because of the 45-degree angle and the fact that it was a base of single prints down on Friday. So I would expect the market will get smacked down if it tests that. If it's able to get through there, come back down and turn it into support, that would be bullish for continuation higher for me. But in the middle, in the overnight range, it is a giant chop zone. Buyer beware. Let's jump on over and take a look at the NQ. We'll see what's happening there. Okay, let me start by zooming out and taking a look at the daily chart on the NQ. Yeah, so the NQ is in balance as well. Same thing. Massive move of excess to the downside. So far, it hasn't really shown its hat. Is it balancing with time? Or is it going to balance with price? We don't quite know yet, but this morning we're dancing right on the edge. So I would call a balance area low 14,670. That's like a potential balance area low. So if the market pushes its way below Friday's low at 14, about 18-ish, okay, if it gets down there, turns that into resistance, you could target a pretty big move down towards the 14,600s, as I think that would be the balance area low in there. And same exact thing on the high, pretty much, it's not a perfect textbook, but pretty much a 45-degree angle on the high. So I would consider the overnight high the balance area high. So that is pretty much your balance area right here. So if you get resistance at yesterday's low, you're looking for continuation down to the bottom end of balance. If you come back up and you push above the overnight high and find support, that's very, very bullish that the market is going to keep going. If you can't, more sideways move. And that to me is the higher probability. 3 minutes to market open. Any final questions for the pirate? Bronther says, good to see you. I started in your channel about a year ago. He says, I started in your channel about a year ago, but then had to stop trading. I just found a prop firm, so I'm back in and on Bookmap. All right, well, I'm going to give you a very unsatisfactory answer, which is I don't think prop firms are good for traders in the beginning. There's nothing wrong with trying to size up if you've already got years of experience profitably trading with your own money. But the prop firms, the structure, the way they're set up actually works against you. It makes it harder to learn to be a trader. It's better to learn with your own money where you get to create your rules. What do you have to do, not have to do, so that the rules can be designed around your personal psychology, what works or doesn't work for you. So, for example, a lot of traders have to take on drawdowns, right? They have to enter a trade, let the trade go against them, and stay in it, and then the trade ends up working out for them. So for those traders, they're not allowed to have drawdowns. They could never be successful using a prop firm. For years and years and years, they can try to use a prop firm and they'll never be successful. But if they just paper traded for a while, found the strategy that works for them, realized part of that strategy is initially taking on a drawdown, they could develop a strategy around that. They just have to trade with their own money. But anyway, long story short, we're happy to have you back. Welcome. Good morning, ES Trade Monkey. Bust a Move says, with such a good read on the TPO, how does Bookmap play into your trading? It's a great question. I use Bookmap to tell me who the participants are that are doing business and try, I mean, it's not like anything will tell you for sure, but try to give me some insights as to what they are trying to do. So essentially, the market profile shows me where the market has gone and what it did when it got there. What price levels did it travel to? And, where did it bring in the volume? How much time? So on and so forth. What the Bookmap shows me is the liquidity. It shows me the volume that's sitting in the order books waiting to trade. That's very, very important because that's where you get insights as to what might come next. How? Two things. First and foremost, where is the liquidity? It's a simple question. Where is there more, more contracts to be traded? Is it above or below? So right now at this moment, a lot more liquidity above. So the odds are, even if we're heading down to test yesterday's low, we're coming back up for that liquidity at 43.20, right? So that's the first thing. It shows me where the liquidity is, and it shows me what's happening with it. So as it changes, as the market moves in the direction of the liquidity, what happens? Does the liquidity below disappear as it moves towards the larger node? Does the larger node above disappear? See, it's starting to disappear right now as we speak. That's a sign of a spoof. That's a sign that they're just going to let it fall right back down right now. It just happened. So you see that there was all this. Let me zoom in. There was all this liquidity sitting up here, waiting. And when the market came to it, boom, they disappeared it, right? So those weren't real sellers that were waiting to take the market lower. That's information. Increases the odds of chop in my mind. Chop, chop, chop. So yeah, the Bookmap gives me a clue of what could come next. The market profile gives me confirmation, understanding of what's actually happening right now. All right, so for those of you that are just joining the program, that are just getting here now, welcome. We're happy to see you. Basically, what I am looking for here on the ES today is a sideways day. I believe that the ES is balancing on the daily time frame. So I suspect that we are just going to go sideways inside yesterday's range, inside the overnight range. If we push below Friday's low at 43.11, down here, if we push below there and we come back up and we turn it into resistance, I would look for a move down to 4,300, but not necessarily beyond there, because I do think that we just want to go sideways today. So we may poke down, we may liquidate the market to bring in some stronger hand buyers, but I suspect those buyers will be waiting and will come right back up. And then same thing with this area up here around 43.50. I suspect that will act as resistance. If we're able to get through it, that would be bullish. But I assume we're not. We're going to push up in there and then just go sideways. And the reason is because of the balance on the day time frame. Ladies and gentlemen, we have a chop zone. We talked about this last week. Somebody asked me about the indicator down here at the bottom of the chart. So we are reaching the point where this is starting to get interesting as the stops are going higher and higher and higher, but the icebergs are going lower. That divergence between the two tells us that smaller players are getting squeezed. Okay? They're getting squeezed as buyers, and larger players are accumulating as sellers. So if we look at the chart here, we can see 500 on an iceberg short, then 200 stops that were long, sellers that got squeezed out. Another 200 short, 300 short, another 275 that got squeezed to the long side. So right now, the market is pushing up, but it's building resistance to come right back down. Jonathan says, when price revisits a single print What effect do they have typically? Well, if it's the first single print, they act as resistance. So this is not a great example because there's only 2 single prints there. But if you look at Friday, we got 2 single prints right here. Let's say we had 10. We'll just pretend we had like 10 single prints right there. It looked like the overnight right here. Okay. None of these ones, the bottom 9, would matter. Those single prints are no big deal. But when you get back to the first single print, the place where the change happened in the market, where it broke lower, that is likely to act as resistance. So if you look at the overnight range, where was it struggling the most? Right there on the base of that single print from Friday. So we should expect that same thing to happen today. So this level that I'm pointing to right now at 43.21, that is the halfback. When the market is in a chop zone like this, if it is going to move one way or another, it often finds support or resistance at the halfback. So we pushed up, we found some resistance. Now we're pulling back down into that halfback. So the question becomes, does that now become support? If the market can hold the halfback at 21, it's looking for another push up. If it passes back through, it's looking to test the lows. And the chop will continue. Rui says, if it goes sideways, what will make you trade only shorts or only longs unless you trade both? I trade both. So if today, we're getting a little bit ahead of ourselves because it's too early to be sure, but let's say hypothetically it were to push below yesterday's low, okay, and it were to come back up and turn that into resistance, I would short, looking to test 4,300. Once we got to 4,300, I'd have to wait and see what happens there. If new sellers come in, I'll short again, looking to continue lower. If the market pulls back up into yesterday's range again, I would go long to head back up and test the balance area high as a look below and fail of balance. So it's too early to say which of those will happen. Will any of them happen? Who knows, right? If the market pushes up to this 45-degree angle, to this base of the single prints down, okay, if it comes back up there, it's the same story there. If it pushes in and it gets resistance, I can short it for a move back down. If it looks above and fails, I can short it for a move back down. Or if it pushes above and finds support, I can go long for continuation up to test yesterday's high. In the middle, it's too much of a guess for me. They could push it up to here and then reverse. They could push it up to here and reverse. They can push it up, bring it down, push it up, bring it down, put it up, and then drop. I mean, anything can happen inside the chop zone. And it's just too hard to know. All right, the liquidity in Bookmap has just gone dark here right at the 9:45 mark. So I assume that there's some news dropping. We'll look for a little volatility here. And a test of the halfback. Can they hold it? 43.2150. Anter says about the prop firms drawdowns, they do force you to implement risk management. Yeah, but that's my point is your risk management should be based on your psychology. Everyone is different. There's no one size fits all risk management. So if the system that they happen to devise is perfectly suited for your personality, then you're one lucky son of a gun and you'll have some success. But my guess is it's not, because the psychologists that they hired to help them come up with those rules were not trying to work in your favor. They were trying to work in the prop firm's favor and get you to continually believe you're about to be successful. You're about to pass. You're about to get funded. You're about to get paid out. You're about to whatever, but never actually get there. They have custom engineered it to trick you. And you don't have to have that. You could trade with your own money and then you're completely in control. All right, so no support at the halfback. That increases the odds of more chop. So if we pass through the opening price now at 43.17, then we'll be looking for the market to head down and test the overnight low. But what we have here is a chop zone. Good morning, Deborah. Welcome. Bronthor said, I learned with my own money, and that's why I had to stop. Yeah, just paper trade. You don't have to lose any money. You can just paper trade. Trade with a simulated account. But just create your own rules for risk management based on what works for you and what doesn't. And then once you've spent months and months and months trading with a paper account consistently, profitably, again and again and again, then you start using your real money. Then it'll be so much easier. You'll have so much more success. You'll be a skilled trader before you risk your first real dollar. Then once you start risking money, if you're able to keep that momentum going, if that strategy keeps working and you keep making money, then you sign up for the prop firm so that you could size up. You don't sign up for the prop firm to learn how to trade. Then you're just giving money to the prop firm to do what you could do for free, which is paper trade. Just my opinion. Don't hate me for it. Good morning, Philip. Good morning, 200 dogs. RK gets it. I could be making bank on referrals if I just supported these prop firms. The reason I don't is because I genuinely believe they hold you back. They make it harder for traders to be successful. Gino says, Powell speaking in 90 minutes. Say what? Say what? Where is he speaking? Busta says, you don't talk much about the overnight profile. How does that play into your analysis? So there are several things I look at for the overnight profile. So for the sake of this conversation now, include this little profile inside of this one. Pretend it's one big profile. This is like Friday and then the weekend. But we'll just treat it like it's one big overnight. So essentially what I do is, the first question I'm looking at in the overnight is, how is the overnight inventory? So basically from where we closed the previous day to where we're going to open today, what move has the market made? So this morning, that move was to the downside, right? We closed on Friday up here. We opened this morning down here. So the first thing I'm saying is the overnight inventory is net short. There are more people who are short than long, because there literally had to be in order for the market to be at a lower level. So the first thing I'm thinking to myself is, all right, if the overnight is net short, what do those sellers want to see happen, right? Obviously, they want the market to open. They want to see it push below the previous day's low, and they want to see new selling there. If that happens, the market can just keep going lower because those sellers from the overnight have no reason to take profits. They're getting what they wanted. But if that market were to push below the previous day's low and it didn't get those new sellers and it started to come back up again, well, then what does that information tell me? It tells me there's a bunch of people who are short from the overnight who are getting freaked out right now. So as soon as the market passes back through that opening price, I'm looking for a short covering rally, right? So that information helps me to know what is the most likely first move for the market to make. And then how will I know whether it's working or not working, right? The other thing I watch is the overnight high and the overnight low. These are the levels where the overnight ran out of steam. They couldn't push it any higher. They couldn't push it any lower. Odds are, if there were buyers waiting there in the overnight, there will be in the regular trading hours. So that's, again, something I want to be aware of. What happens to our market when they get to the area where the overnight found buyers? Do we get support and turn around and head back up or not? Okay. And then the last thing I look at are the large volume and time nodes. So the spots where you see the big dark sections of volume and the areas where you see big chunks of letters, big chunks of time. Those are the other things that I look at for support and resistance. So speaking of which, passing back through the opening price increases the odds now. We are heading down to test that overnight low. Will be very important to see what happens when we get there. Do we get new selling and continuation lower, or do we just look below and then come right back up, getting more chop? JS says ticks never lie below the zero. Ticks can lie, JS. This is the one time. In a chop zone, the ticks can be tricky. So if they're staying pegged below the zero line right now, that's a little bit bearish to see, but it doesn't mean much. Because if they break out of the chop zone to the upside, those ticks will just go with it. And this will have just been a bit of sideways first. So I would say it's probably a little too early to put any weight on the ticks yet. When the market's in a chop zone like this, there is literally only two things I watch. Previous support or resistance levels, right? Places where the market reversed before. What happens when we get there? And then the halfback. What happens when we get there? If we push into resistance and come back down, does the halfback act as support? If we push into support and come back up, does the halfback act as resistance? That's it. That's the only insight I have found that works in a chop zone consistently. Speaking of which, do they turn it into resistance? Do those ticks get smacked down once more? Brahm says, I've been paper trading for over a year and it's just difficult to translate to real money. Well, that's easy. If you're telling me you have a way to trade the market and consistently make money using a paper account, using a simulated account, and then you switch to real money and you can't have the same results, that is the easiest problem to solve in trading. I've got good news for you, my friend. You can be a profitable trader. All you need to do now is figure out what's the difference between the two. What actions are you taking when you're paper trading? And then what actions are you taking differently when you're trading in regular trading or when you're trading with real money? So if, for example, you trade a gap trade, you have a gap fill trade where you take a trade to fill the gap. And when you're trading it with paper money, you have a 70% win rate with that trade. It works all the time. And then you start trading it with real money, and all of a sudden you have a 40% win rate or something like that. Well, then you have to say to yourself, what am I actually doing different? How am I trading? Something is different. I'm doing something different. What is it? And then maybe you realize that when you take the gap fill trade and you're trading with real money, you move your stop right away. Because you have that feeling of like, oh no, I'm going to lose money. I'm going to lose money. So you like move your stop right away and then you get stopped out. Whereas when you're trading with the paper account, you don't really give a shit because it's paper money. So you just leave it, let it run, let it wait, and then it finally fills that gap and you get to take profits. So as soon as you recognize, okay, here's my problem. My setup is fine. My decision to trade a gap is fine. It's my execution of my stops. That's why I'm losing money. Boom. Then you can make a change. Stop doing that. So yeah, going from paper account to real account, there is always going to be problems. But those are the easy ones to fix because they're very easy to figure out. Just what am I doing different? Why? Make a change, you know? So stick with it. You're on the right path. Nap Powell's at a round table discussion. Is it open to the public, though? Or is he just at a conversation? Do we get to listen? That is the question. Ah, it's on Forex Factory. Okay. Oh, you're saying that he's going to speak. Well, that's 2 minutes from now, so we'll see if we get any volatility. We are getting Bookmap going dark, so that tells you something's probably going to happen. Yeah, Bookmap has gone ghost town. What a perfect place to spend an hour grinding around right at a balance area low. It's that PMI data. That's why the market went dark. So remember, when the order book is completely dark like this, it is best not to take trades. Obviously, if you're in a trade, you can stay in it. But with the liquidity this thin, they can move the market around very, very quickly. And so they can reverse on you in an instant. The best thing you can do now is just sit back and wait until the liquidity comes back. Wait till you start seeing all those yellow and orange levels popping up on here. Then you can trust whatever move has been made will be sustained. So for example, if the market pushes back up here, gets above that A period high, comes back down, and then we start seeing real liquidity step in here, well, then we could get bullish to head up higher. But right now, while it's still dark, they could just whoosh, bring it right back through. So it's best to be patient and wait. Okay, market just created a poor high. That's a little bit bullish to see. It increases the odds that this is a push away from the poor high that will find support and then come back to repair it. Oh, poorer. Okay, there's the repair of the poor high. All right, well, like I said, it's too soon to be bullish because we have to wait for that liquidity to come back before we can really trust it. But that is a little bit bullish to see. So I would suspect if they can hold it, if when they pull back down, they turn this into support, that we will head up to test the resistance around, between 43.50 and 43.40. Okay. I would not be bullish on the day time frame beyond that level. Meaning, if we can turn this into support now, we can head up there, but that doesn't necessarily mean we're going to get past it. There's going to be a lot of resistance in here, just smacking the market down again and again and again. So it's only if it can get above this node at 50, come back down and find support, that I could really get bullish on the day. Otherwise, I believe we're going to have a balance day, and we're just going to go sideways inside yesterday's range. Okay? Pretty much just inside the overnight range. Going sideways in here. With that, I must say goodbye and head on over to the private stream. If you are a member of the brigade, head on over to the private stream. I'll see you there in about 1 minute. If you're not a member of the brigade, check it out. There's a link in the banner above me. You just head to piratetraders.io/join, and you can join the party. You can be one of us. You can hang out every day for the first hour with your friends and talk about the market. Something to consider. Thank you very much, and we will see you here next week.